Welcome back to Investing Talk podcast. Comtech Telecommunications, the name itself sounds like connectivity, doesn't it? They've actually been around since 1967.
A long time.
Today, we're going to really get into this company. We've been pulling insights from financial analysis provided by Alpha Spread and also digging into the company's own detailed annual reports.
And our goal for you, sticking only to these sources, is to unpack what really stands out. Their business areas, the financial health, the risks, the opportunities, trying to give you a clear picture of what seems most important here.
I think this one's particularly interesting because Comtech operates in some, well, foundational areas, really critical stuff.
Absolutely. Everything from connecting satellites up in orbit to
Making sure 911 calls get through properly down here. It's quite a range.
There is a lot to synthesize, though. You've got this complex technology, significant government relationships, and then all the detailed financials interacting.
Okay, so let's start with the business itself, based on what these reports tell us. Comtech's foundation, it seems, is built on two core markets. That's right. You have the secure satellite and wireless communication side of things. That's their satellite and space communications segment.
Okay.
And then there's the next generation 9/11 and public safety part. That falls under terrestrial and wireless networks.
Got it. And the annual report lays out a strategic vision. What's the core idea there?
They talk about seeing around the corner, anticipating market convergence, specifically this idea of global terrestrial and satellite networks coming together.
So connecting everything, basically, aiming to capitalize on that big trend.
That seems to be the bet. It's
Yeah.
about positioning for where the communications world is heading.
All right, let's break down these segments a bit more. On the terrestrial and wireless side, the big focus seems to be next generation 911, NG 911.
And this isn't just your basic emergency call anymore. The sources describe a whole suite of solutions.
Like what?
Well, systems integration, getting accurate geospatial location info, connecting to these advanced NG 911 networks. They specifically mentioned their Solacom Guardian brand for call handling.
The Guardian platform. It sounds pretty comprehensive based on the description. Features like integrated text to 911 and even from 911.
Yes, both ways.
Yeah.
And sharing live incident info, photos, video through something called Guardian Messenger, plus analytics via Guardian Insights.
Okay. And they're moving towards 911 as a service too, like hosted solutions.
Looks like it.
Yeah.
They also mentioned something called Smart Response for first responders.
What does that do?
Allows streaming feeds, accessing caller information, things like past residences, criminal history, next of kin, quite detailed.
Wow. Okay. And beyond public safety, this segment also covers cybersecurity.
It does. Training and services. Brands like CyberStronger, CYBR Score, Performance Score are mentioned.
For threat monitoring, assessment, training,
Right.
workforce development stuff.
Exactly. And their customer base here is broad state and local governments, mobile network operators, other government entities, big universities, enterprise clients. A real mix.
Okay, switching gears then. Satellite and space communications. This sounds like the really deep tech part.
I'd say so. Satellite ground station technology, for one.
Yeah.
They mentioned the UHP acquisition brought in specialized TDMA satellite modems.
TDMA. That's the technique for sharing a single channel efficiently, right?
That's the one. They also provide components that actually go into the satellites for LEO, MEO, GEO orbits, low Earth, medium Earth, geostationary. All types.
Plus maritime antenna solutions.
Right. And another area highlighted for growth potential is troposcatter systems.
Troposcatter, bouncing signals off the atmosphere for long distance.
You got it. Useful where ground infrastructure is tough or damaged.
Yeah.
And actually linking that to current events.
Yes.
The annual report specifically notes a funded order to supply Ukraine with these troposcatter systems.
So a concrete example of demand driven by geopolitics.
Exactly. And the sources point to other market tailwinds for this whole segment too.
Like what kind of things?
Ongoing tech upgrades, modernization programs, all these new satellite constellations being launched.
Like Starlink and others, yeah.
More connected devices needing satellite links, and just general government and defense spending maybe ticking up due to geopolitical tensions.
Makes sense. Though it's worth noting they mention exiting their steerable antenna operations in the UK.
That's right. That was a specific strategic decision mentioned in the period covered.
Okay. Now, cutting across both segments seems to be this heavy reliance on government services contracts.
Yes, and these are often long-term, multi-million-dollar deals. The sources give some examples.
Such as?
The GFSR contract with the U.S. Army, cybersecurity operations training contract, the GTAX-2 contract for VSA systems.
VSA, those are the small satellite dishes for data transmission.
Correct. But these government deals, the reports are clear, come with specific risks.
Like potential protests challenging the contract award.
That's one.
Hmm.
Or just the fact that if you're one of several awardees on a big contract vehicle, you're not guaranteed the full potential value.
Still, being a pre-qualified vendor must help.
Definitely a plus. So that paints a picture of what they do. Now let's look at the numbers, the financial health, based on these sources. Alpha Spread provided an intrinsic value analysis.
Right. What did they come up with?
Under their base case scenario, Alpha Spread calculated an intrinsic value of $12.14 per share.
12.14. And how did that compare to the market price mentioned in the source?
The market price noted was $2.27 USD as of that source date. So the implication from Alpha Spread's analysis is, well, significant undervaluation, about 81%.
That's a huge gap. How did Alpha Spread arrive at that value? What methods?
They used a combination, discounted cash flow or DCF, estimating value based on projected future cash flows.
And bringing them back to present value.
And also relative valuation,
Yeah.
comparing metrics like price-to-earnings ratios to similar companies in the sector.
Okay. And the reports highlight various financial metrics Comtech itself tracks.
They do. Things like profit margins, gross, operating net, PE ratios, investment returns, financial leverage. Your standard metrics like ROE, ROA, ROAC, return on equity, assets, invested capital.
What about recent revenue trends? Did the sources give any numbers?
Yes, the latest available data cited showed Q2 fiscal 2025 revenue at $126.6 million. That was down 5.7% year over year.
Okay. A dip there. And longer term.
The trailing 12 months, or TTM, revenue figure was $496.64 million, which showed a larger drop, down 13.06% year over year.
The annual report also included that stock performance comparison chart, didn't it?
It did, showing a hypothetical $100 investment over 5 years compared to the S&P 500 and the Nasdaq Telecommunications Index.
And how did Comtech fare in that comparison over that specific period shown?
Generally, it underperformed both benchmarks according to that chart.
Okay, what about the balance sheet? Any key items mentioned?
Cash and cash equivalents were $21.7 million as of July 31st, 2022.
And debt, that often comes up.
It's definitely a notable point in the reports. They have a $300 million credit facility. As of July 31st, 2023, $164.4 million was outstanding under that facility.
And there are conditions tied to that debt, right?
Yeah.
Covenants.
Very much so. The reports are quite explicit about the requirement to comply with financial covenants.
And the potential consequences if they don't.
It could trigger an event of default, potentially accelerate the repayment demands, and lenders could even seize assets pledged as collateral and serious stuff.
Got it. They also have that Series A convertible preferred stock outstanding.
Yes, issued to White Hat Capital and Magnetar Capital, initially $100 million, with an option up to $125 million.
And the holders have certain rights.
They do. Voting rights and potential redemption rights under certain conditions. Importantly, the reports note these redemption rights aren't solely within the company's control.
Okay. Shifting to shareholder returns, stock buybacks, dividends.
The sources mention a $100 million stock repurchase program authorized back in September 2020.
But did they actually use it recently?
No shares were repurchased in fiscal years 2022, 2023, or 2024, according to the reports.
What about dividends?
They targeted quarterly common stock dividends of 0.10 cents per share in fiscal 2023. And they have a history of paying quarterly since 2010.
But there are caveats, right?
Big ones. It's dependent on cash flow, those credit facility covenants we just discussed, board approval, and also the rights of those preferred stockholders take precedence.
So the board could reduce or stop the dividends.
Absolutely. The reports state the board has that flexibility.
Okay, so that covers the business structure and the financial picture from the sources. But as always, understanding the potential pitfalls is just as crucial. The reports laid out quite a few risk factors.
A significant list, yes.
Yeah.
One that really stands out is the heavy dependence on government customers.
Right. A large chunk of sales from U.S. federal, state, and foreign governments.
And the reports flagged the long sales cycles and the unpredictable nature of government funding as key risks associated with that.
The Russia-Ukraine conflict was also specifically mentioned as having an impact.
It was. They apparently lost some expected sales into Russia. It also impacted the sales pipeline generally, maybe shifted priorities for other customers, causing some order delays.
But didn't it also lead to that Triposcatter deal for Ukraine?
It did. So it shows how these major global events can cut both ways, creating challenges but also specific opportunities.
What about competition? How intense is it described?
As high. The reports point to rapid technological change, new players coming in. They even mention examples like Starlink.
Ah, the LEO constellation.
Right, and new distribution models emerging. Plus, the long development and testing cycles required for their kind of tech.
And they acknowledge competitors might have more resources.
They do. They also mention sometimes getting requests for sole source solutions from large wireless carriers, which can add its own layer of complexity and negotiation.
Cybersecurity must be a huge concern given their work in public safety and government contracts.
Understandably, yes. The reports state they face a heightened risk of breaches or disruptions to their IT networks, third-party data centers, their equipment.
And it's hard to completely eliminate that risk given how threats evolve.
Exactly. Though they do mention having a chief information security officer role that reports up to a board committee, so there's oversight.
Now, another really significant point raised in the annual reports for fiscal 22 and 24 was an identified material weakness in internal control over financial reporting.
Yes, that's a major flag. It was attributed to issues like maybe not having enough resources or experience in certain accounting functions.
And deficiencies in control activities related to key areas like revenue, inventory, other assets.
Correct. And the clear implication there is an increased risk that material accounting errors could occur and not be caught promptly.
Okay. Operationally, their strategy involves leasing facilities rather than owning most properties.
That's noted. And the 2022 report mentioned reducing their square footage as part of environmental initiatives.
What about international sales? More risks there.
Definitely another layer, subject to a whole raft of U.S. and foreign regulations. Export controls like ITAR and EAR.
For military and dual-use tech.
Right. And OFAC sanctions rules. FCPA for anti-bribery, plus political or economic instability abroad, currency fluctuations, trade barriers, and the fundamental risk of just not being able to get the necessary export licenses for a sale.
Key personnel risk is also mentioned, dependence on executives and key employees.
Yes, the risk that unplanned turnover could really impact operations or growth.
And the sources actually call out recent CEO transitions.
They do. And the associated costs, including costs from a proxy contest back in fiscal 2022. So leadership stability has been a factor.
What about legal issues?
The reports say legal proceedings happen in the ordinary course of business. They specifically mention indemnification clauses in customer contracts.
Meaning Comtech could be on the hook if there are claims.
Potentially, especially for things like intellectual property infringement claims or, critically, issues with 911 call routing accuracy. The risk is the cost if claims arise and insurance doesn't fully cover them.
The presence of activist stockholders is also flagged as a potential factor.
Yes, the possibility that their actions could influence company strategy or affect the share price.
And dilution risk from issuing more stock.
Mentioned as well, future stock issuances for raising capital for acquisitions or related to convertible securities could dilute existing shareholders' ownership and potentially put downward pressure on the stock price.
Any other specific accounting risks highlighted?
Just the inherent uncertainty in areas like estimating warranty obligations or making provisions for inventory that might become excess or obsolete. Judgment calls are involved.
And tax matters are complex too, I imagine.
Very. The reports touch on deferred taxes, net operating loss carryforwards, R&E credits, valuation allowances against some deferred tax assets, uncertain tax positions. It's a complicated area.
Okay, finally, the annual reports also touch on people and culture. How do they frame that?
They highlight employees as valuable assets, emphasizing a focus on engagement, happiness, and having a comprehensive people strategy.
Is there a focus on diversity and inclusion?
There's a stated commitment to building a diverse, inclusive, and equitable workplace. The 2022 report mentioned efforts to boost female representation in leadership and on the board.
Any specific numbers?
The 2024 report provided workforce diversity stats. 24% women, 39% people of color, 12% veterans, and 7% people with disabilities.
What about training and development?
They mentioned partnerships with the U.S. government to train military personnel transitioning to civilian life and also working with universities for interns.
And employee well-being, health and safety.
Programs like an Employee Assistance Program, EAP, a health advocate service, safety committees, wellness events, those kinds of initiatives are mentioned.
And R&D spending, crucial for a tech company.
Absolutely.
Yeah.
It's reiterated as key to technology leadership. The reports provide figures for R&D spending, both internal and customer funded, as a percentage of sales over different years, noting there are fluctuations.
You know, at first glance, things like employee engagement might seem less critical than, say, debt covenants.
But when you think about the highly technical work they do, especially the government and public safety contracts. And you link that back to the key personnel risk they themselves highlighted, retaining skilled, motivated people becomes absolutely central to actually executing on their strategy.
Wow. Okay, we have really pulled apart a lot of threads here from these sources. You've got the deep tech in space and public safety, these complex government relationships, the detailed financial picture, and, well, a pretty significant list of operational and financial risks.
I think what stands out is this picture of a company navigating really complex, converging markets. There's interesting potential there. But it's happening while they're also dealing with internal challenges like those financial control weaknesses and facing external pressures from geopolitics and very intense competition.
So for you listening, you've got the pieces laid out from these sources. On one hand, innovative technology in critical areas like space comms and public safety. You have that potential valuation upside suggested by the alpha spread analysis.
But on the other hand, you have these very clear risks spelled out in their own reports. Debt, internal controls, market competition, that heavy government dependence.
It really raises an important question for you to think about, building on everything we've just discussed based on these documents. How do you weigh those potential opportunities, this idea of converging communication technologies, against the significant operational and financial risks described in the company's own filings?
What does that particular mix of potential and challenge mean for your own understanding of this company and maybe even the broader sector it operates in?
We certainly hope this exploration of the sources was helpful. What were your key takeaways? We would genuinely love to hear your thoughts. Please be sure to subscribe, like, and comment.
Keep digging into the sources.